Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. The price of silver is basically broken right now. We're not going to see much happening on the positive side, at least. It looks like prices are still going to go lower into the $11 range over the next couple days. So hold on to your hats, ladies and gentlemen. Things might get a little crazy. We see gold sitting at $1,492. A lot more volatility in gold right now, down 2.52% or down $38. And then we also see silver at $12.05, down 5.35% on the day. A lot of stuff happening. So with that said, I have an article from Seeking Alpha, because the gold to silver ratio is currently sitting at 100 and I think 23 right now. 123 to 1. Yes, 123 to 1. It actually has potential to go higher. So this is the highest we've seen the gold to silver ratio ever, and this article is going to be talking about it, and it's going to be interesting because once you can relate the gold to silver ratio in terms of prices, then you can see which has more opportunity, which is the better purchase, which is the better investment. So right now, as the gold to silver ratio is so exaggerated, it definitely can show us a lot of insight. So with that said, make sure to smash that like button. Make sure you subscribe if you're new, because I do post daily videos. So the close price relationship between silver and gold is nothing new. The silver-gold ratio dates back to 3000 BC, when the first Egyptian pharaoh Menes declared that 2.5 parts silver equals 1 part gold. And that's what I always talk about. You know, the gold to silver ratio, the first one was 2.5 to 1, which means that silver was not much more common than gold was. Silver and gold began trading on the futures exchange in the 1970s. Until recently, the range of the ratios from a low of around 15.5 ounces silver in value each ounce of gold. So it's around 15 to 1, 16 to 1. But then in the 30s, FDR changed the gold to silver ratio from 16 to 1 to 75 to 1 actually. And in 1979, we saw the ratio at 100 to 1. In the 1990s, the average was around the 55 to 1 level, so there was an average there. Therefore, when the ratio is below the average level, silver tends to be expensive compared to the price of the yellow metal. So the only time we saw the average go really low, in the last 100 years, is when silver's been $50 in 2011 and in 1980. So the most recent low, which is this next article is going to talk about actually, so I kind of just summarized it. So the most recent low in the price relationship occurred in 2011, when gold rose to its all-time peak of $1,920 and silver traded to a high of $49 per ounce. That time the ratio dipped to the 40 to 1 level, like I was just saying. So silver tends to attract far more speculative activity than gold. The silver futures market is far more sensitive to risk-off periods. During the 2008 global financial crisis, the price of gold initially dropped from $1,033 to a low of $641 and fell 38%. At the same time, silver fell from $21 to $8.40. That's over 60%. We are currently experiencing a period of risk-off that could turn out to be unprecedented in modern-day markets, as COVID-19 is causing fear and uncertainty and has caused economic activity in many sectors to grind to a halt around the world. So, a new record high. Gold rose above its level of technical resistance at the July 2016 peak of $1,377 in June 2019. While gold broke out to the upside, silver never challenged its July 2016 high at $21.09 per ounce. Silver only made it up to the $19.54 mark in early September, and it had not returned to that level even though gold had continued to make higher highs. So silver did not follow suit, which it usually does. On Tuesday, March 17th, gold was around the $1,535 level after trading to an over $1,700 per ounce level just 1 week and 1 day earlier. That's crazy that gold was so high and then crashed so hard. So while gold fell over $250 per ounce at the low, the yellow metal remained well above technical resistance at the July 2016 high, which is now technical support. Silver, on the other hand, tanked and traded below $12 per ounce on March 16th, the lowest price since way back in 2009 during the last significant financial crisis. So silver is hitting 11-year lows, while gold still has some July 2016 high stability right there. So the quarterly chart shows the ratio is around the 122.6 to 1 level on March 17th. Silver is at its lowest against gold in modern day history. The price deviance can continue to rise to higher levels in the current environment. So look at that. So right now the ratio is actually higher. It's the 123 to 1 level. So it's still going upwards, which is seriously alarming. It's extremely exaggerated. This means that gold is definitely outperforming silver right now, and silver is just tanking. So historical deviance can persist for long periods. Mean reversion can be a powerful force in the market in markets at times. So during risk-off periods, all bets are off as looking for a mean reversion opportunity and can get market participants into trouble. While silver is at its most inexpensive level against gold in our lifetime, it does not mean it's going to snap back anytime soon. There are no rules in the markets when deviations from historical norms develop, which are saying that just because the gold to silver ratio is so high does not mean it's going to correct itself anytime soon. There's no rules. There's no one saying that it has to go above, below 100 to 1, which is even more scary to think about. Because what if we see these ratios sit at these high prices? I definitely don't think so, but it is possible, and there's no one that's going to stop it from doing that. That's what they're saying. We have witnessed the potential for extreme and prolonged periods of deviance in platinum, which fell to its lowest price since 2002 on March 16th. Silver and platinum have been weak as the gold and other precious metals were moving higher over the past weeks, months, and even years. In the current risk-off environment, the weak got incredibly weaker. So that's very interesting. Now let's go into this. So because when we're talking about that, the gold to silver ratio might actually stay at these prices. One would think that something else has to happen to really keep it that way. And the 2020 presidential election, I think, would put the ratio back lower, as it could put the ball in silver's court, and I think that could benefit silver prices. So silver fell hard in 2008 during risk-off and came storming back, a scaled-down approach. The bottom line is that silver is a modern-day low versus gold. The divergence could continue to widen, but the best comparison for the current situation came in 2008. But we must remember that the 2020 COVID-19 virus is beginning to look even more severe. The quarterly chart shows that the price of silver fell from $21.18 in 2018 and to a low of $8.40 later that year, a drop of over 60%. Silver traded to a high of $19.54 in September 2019. A similar decline will take the price to the $17.80 level. Platinum already dropped to a low of $562 on March 16th, the lowest since 2002. So central banks around the world are flooding the globe with unprecedented amounts of liquidity. The level of interest rates is likely to decline below the post-2008 lows, and quantitative easing bazookas are likely to send rates further out along the yield curve into negative territory. Meanwhile, the answer to COVID-19 will not come from monetary or fiscal policy initiatives. It will be coming from the scientists and medical professionals. All of us can do our part by following instructions, doing everything in our power to stem and limit the spread of the virus. But when the virus subsides, and we all should have lots of faith in those working treatments with the vaccine, the liquidity and stimulus will continue. The economic fallout from COVID-19 will continue into the foreseeable future. One of the victims is the value of the world's currencies that lose the value of each rate cut and stimulative bazooka shot. So that is true, we don't know to the extent that this is going to, be pushing out our, because when we're looking at it from a daily perspective. But when you're looking in the foreseeable future, we don't know to the extent that the virus is going to spread. Also, we don't know to the extent that the feds have to cushion the economies. We don't know if this is going to spark the recession. We don't know what this is all putting at a halt. There's a lot of things that are being affected by it. So it's going to be interesting. So anyways, I'm going to wrap this video up here. Like I said, the gold to silver ratio is sitting at 123 to 1 right now, the highest it's ever been. Interesting stuff right now. I'm curious where you think the gold to silver ratio is going to be going next, higher or lower, and why. More importantly, why? What's going to be the consequence of this ratio getting this high? Are we going to see gold start to fall and silver start to approach higher, or vice versa? What do you think is going to happen? I definitely think it's interesting times right now. So anyways, thanks for tuning in this video. This was Silver Slayer. Make sure to smash that like button. Subscribe if you're new, because I do post daily videos. I'll see you guys soon. Peace.